We all remember Tariff-geddon. We all remember when Trump came out and announced tariffs and set the world on fire, and we dropped 25.59% in the NASDAQ 100 or the QQQ. We absolutely tanked to a low of $402.39. Then, just as quickly, right, we had a 12% up day, the largest day in NASDAQ history, I believe. We had a massive up day, and ever since this April low on April 7th on Tariff-geddon, we've ran 58.31%. So basically, over doubling the move that we had down, over doubling that to the upside. Well, what's a squiggly line on the chart? The squiggly line here is the 21 EMA. When we broke the 21 EMA back here in February February 24th in 2025, that is whenever we knew that things were not going to be good. Kept falling, retested the 21, and then kept falling some more, eventually making a higher low, breaking out of the 21, and then ever since then, just continuing up, up, and away for a total of 58.31%. During this time, we came back and retested once, twice, 3 times, 4 times, 5 times, and now we are on our 6th time. Our 6th time over 220 days of coming back to this 21 EMA and testing it. So what happens if we don't bounce off this 21 EMA? Well, very simple. You saw back in February of this year what happens whenever we don't bounce off the 21 EMA, right? When we don't bounce off the 21 EMA, more than likely, we're going to continue to fall lower and lower and lower. Not always. Sometimes we just barely come under and then go higher, right? But this consolidation, make no mistake, trapped a bunch of people and then spit them out. Trapped a bunch of people, chewed them up, spit them out, and then we crashed hard down almost 26%. So right now, like, we still have this gap down here. We still have this gap right here. And I think that's, nope. And then I think there's a gap right here as well. So we still have these gaps to hit down here, right? To basically get to fill these gaps and see a correction. Now, a correction back down there would be pretty nasty. This would be another 20, this would be a 22% correction to fill the lowest gap that we had all the way down here from Tariff-geddon, right? Be about 22%. To fill the midway gap, 15% from the highs, and then to fill this gap right here, about 11%. So this video is more to show you that, hey, we're at a very, very key area in this market right now. If this 21 EMA does break down below this 21 EMA, I think I just said that twice. If we do break down and close and then even retest from the bottom and then make it a lower high and a lower low, then it's pretty much all but said that I think we'll at least come down and fill this gap at $566-ish right here. And again, that would be around 11% correction in the overall markets. And then we just have to see what happens from there, right? If it's something like the beginning of this year, we could just continue to flow down in this downtrend. And make no mistake, we are in a downtrend. We hit a high, we made a low, we made a lower high, we made a lower low, and now, right now, it's just depending on where we go. If we stop here, then that's going to be a bottom, high, lower high, and then we have to see if we can make a higher high. If we can do that, then we should be good to the upside. If we can't do that, and this was just a high, low, lower high, and then a lower low, then yes, we are in a clear downtrend and we'll continue that way until we break out over that trend. But right now, make no mistake, again, we are in a downtrend for right now. This is a high, this is a lower high, this is a low, this is a lower low. We are in a downtrend. And it just depends, like this question mark says, where do we go from here? This is just something that you should really be keeping an eye on. And this is exactly why I'm sitting really in relatively zero trades right now. I haven't been trading this market in October in November, really at all, because I saw this choppiness that was starting to go on. And since April, it's just been up, up, and away, and lots of money to be made, right? Until about, really starting in October. Starting in October, we've just kind of been in this range, and like these big spikes up, get big gap ups, big gaps down. Then we're filling the gaps, so on and so forth. And it looks to me just like it did at the beginning of this year. And I've been calling this out on X. I've been talking about this for a little while, that once we like stopped this big move up, we really started having these big shots down, up, gap ups, gap downs, gap ups, gaps downs, and just a big consolidation period, which is fine when we consolidate. You're like tightening up the coils, and you're eventually going to spring upwards or spring downwards. I don't know what direction that will be, but following the 21 EMA, it can kind of give you a clue to where that would be, right? So right now, think of this like, hey, we're coiling up here. We're coiling up here and we're consolidating. And where we go from here, I don't know. If we hold the 21 EMA, then we should be able to come break out and go to new all-time highs and have the Santa Claus rally. If we don't, like my indicators are saying, my indicators are curling down, then we break the 21 EMA, especially if we retest from the bottom and then fall lower, then yeah, we're going to be in for a rude awakening of, at least in my opinion, 10% correction, if not more, if not 15 or even 22% down. Not going to sit here and say we're going to fall 22%. I don't know. But are we due for a correction? Absolutely, we're due for a correction. Did you miss the part where I said 58% to the upside after going down almost 26%? Yeah, guys, we're due for a correction. It's okay. It's natural. It's healthy for the markets to correct. It doesn't feel good whenever you're all bulled up and you're saying higher, 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 and you're in a ton of trades, and then you get smacked in the face with a 5% correction. And then all these other times you sat there and said, oh, I'm just going to buy the dip and it's going to bounce right back. Well, you were right once, twice, thrice, 4 times, 5 times. You're right 5 times. But just like we saw in this bull market, or not bull market, but what we saw in this upside, right? Going into the beginning of this year, yeah, every single dip was bought up and we snapped back higher. Every single one, until we didn't. Once we didn't, then it really hurt. People buying these dips all the way down eventually probably sold here or here and said, yeah, I'm out. I can't just keep on buying this dip, right? As a trader, I'm not saying as an investor. As an investor, your goal is to buy the dip, but not spend all your money too quickly. So yeah, I just want to make this video, talk to you guys a little bit about what I'm seeing and kind of give some scenarios of what happens here. But make no mistake, we're at a very key inflection point right here. And where we go from here, whether we hold this 21 EMA or don't, is going to be very key for the overall markets and where we go from here. If you enjoyed this video, smash that like button, share it, and let me know in the comments below which way you think we are going to go from here: higher, lower, 10% correction, or back to all-time highs. Let me know in the comments below. Have a great day, guys, and I'll talk to you in the chats.